Alibaba just released their latest quarterly figures, a good quarter. The stock year to date was already up close to 50%. Now before the market opens, we're up over 7%. Me personally, I have a position in Alibaba. As you know, I will be up more than 50% on that position. So yes, it is possible. It is possible to be up and make some money on Chinese stocks. But of course, I understand those that do not want to invest in those Chinese stocks. I completely understand that. Now, even with this performance year to date, the forward PE for Alibaba was still very, very cheap, 13.9 times. Even after the pre-market action, this still remains extremely cheap in my opinion. Now, if we actually look at the average analyst price target before all the upgrades happen throughout the next couple of days, we can see that the average analyst price target actually sits lower than the price we were before the reported earnings. So it's going to be very interesting to see what happens when, well, price drives sentiment yet again. And so before jumping into this report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So as always, we'll start with a major overview here. The numbers compared to what the market was expecting, brought to you by Consensus Media on X. So lots of beats when you look at revenue, right? Small misses on local services, smart logistics. They actually talk about China a little bit, so there is an explanation on that. Most of the misses are because of EBITDA margin. Of course, if you miss on EBITDA, you'll probably miss a little bit on EBITDA margin as well. And then again, we get a big miss here on free cash flow, a miss of 18.8%. If you were interested in following some super investors, so as we covered, David Tepper from Appaloosa Management did add more in Q4, more to his Alibaba position. We had Samantha McLemore here at 4.7%, but that's a very small position in the portfolio. And then we have Michael Burry that did reduce his position in Alibaba by 25%, but Alibaba is still the number one position in his portfolio. Howard Marks actually sold 100% of his position after adding in Q3. And then Christopher Davis also sold out completely of Alibaba in Q4. So this quarter's results demonstrated substantial progress in our user-first AI-driven strategies and the re-accelerated growth of our core businesses. During the quarter, customer management revenue at Taobao and Tmall Group grew 9% as a result of initiatives to enhance user experience and effective monetization. Our cloud revenue growth reignited to double digits at 13%, with AI-accelerated product revenue achieving triple-digit growth for the 6th consecutive quarter. Looking ahead, revenue growth at Cloud Intelligence Group driven by AI will continue to accelerate. We will continue to execute against our strategic priorities in e-commerce and cloud computing, including further investments to drive long-term growth. Then, as for the CFO, while we made substantial investment to spark growth reacceleration in our core businesses, we maintain financial discipline with enhanced operational efficiency, achieving positive EBITDA growth in Taobao and Tmall Group. During the quarter, we continue to actively manage our balance sheet with significant non-core asset sales, share buybacks, and extending our debt maturities at attractive rates. And so, if we look at the business, actually, let's look at this first. So, Taobao and Tmall Group, which is the largest segment of the business, is basically China commerce. All of that grew 5% year over year, which of course is faster than the 9 months ending. Looking at customer management, which was basically ads and fees, that increased 9% year over year. As for Alibaba International Digital Commerce Group, that keeps on growing very quickly, up 32%. And then Cloud Intelligence Group, a re-acceleration in growth here, 13% year over year. So that's great. Chaonao's Smart Logistics Network, that was down 1%. They did give us an explanation on that. They said this is the result of ongoing restructurings with our e-commerce business taking on certain logistics platform roles. Chaonao will continue to focus on building its global smart logistics network and make its end-to-end logistic capabilities available to our own e-commerce business as well as third parties. And so you're also seeing adjusted EBITDA basically decrease 76% year over year. Now, as for free cash flow, you can see that free cash flow is of course lower this year than last year. This is in Chinese currency and this is the one in dollars. But I said the following: the decrease in free cash flow was mainly attributed to the increase in expenditures related to our investments in cloud infrastructure, partially offset by changes in other working capital. Now, if we go a little bit higher and see why there is such a big difference, well, we get a big hit here this year. Why is that? Well, this is because of this purchase of property and equipment, excluding land use rights and construction in progress relating to office campuses. So a much bigger hit than last year, which impacts this number, because if you look at net cash provided by operating activities, it was higher than the prior year. Touching back on Taobao and Tmall Group, more specifically here, the adjusted EBITDA segment that increased 2% year over year, primarily due to the increase in revenue from customer management service, partially offset by the increase in investment in user experience. They also said that the number of 88 VIP members, which is basically the equivalent of an Amazon Prime, let's say, our highest spending consumer group, continued to increase by double digits year over year, reaching 49 million during the quarter. We will continue to grow the subscription of 88 VIP membership by providing attractive benefits and premium services. As for Alibaba International here, it's growing fast, but if you look at adjusted EBITDA, well, that has increased. The loss has increased by 57%, primarily due to the increase in investment in Trendyol cross-border business and AliExpress, partially offset by Lazada's significant reduction in operating losses due to its improvement in monetization and operating efficiency, as well as improvement in profitability of Trendyol's domestic businesses. So yeah, it's a bit like Amazon International, right? Growing fast, but was not profitable for a long period of time. Here, it's a bit of the same. It's about taking more and more market share, and then I don't know when they'll focus on the profitability side of things. As for the Cloud Intelligence Group, here we can see that revenue is reaccelerating and adjusted EBITDA has increased by 33% year over year, primarily due to shift in product mix towards higher margin public cloud products and improving operating efficiency, partially offset by the increasing investment in customer growth and technology. And I guess the market is way more focused on, well, the cloud segment continue to grow and actually reaccelerating than looking at some short-term headwinds with regards to free cash flow. Because, well, this has been a struggle, the cloud segment, right? Everybody's cloud is growing quite quickly, yet Alibaba was always struggling. It was growing, but not growing as fast as expected. So now that we are seeing continued growth here and reacceleration, despite a hit in free cash flow, I think the market is quite happy to see that. Plus the fact that maybe the China business is also doing a little bit better than expected definitely helps. And so right now, looking at the stock, this is on the weekly, it does seem like the $120 mark resistance was broken. Now, of course, we're going even higher. RSI is hopefully going to be higher than previously, because you don't want to see the stock go higher while RSI is not higher. That's usually a bearish pattern, but the business, in my opinion, is doing well. I think it's still undervalued, might not be as undervalued as previously here at $80, but if they continue like this, I see really no reason why this stock couldn't go higher, get a higher premium from the market. Because remember, just by getting a higher premium, higher multiple for the forward PE, will already push this stock much, much higher. We keep saying the same thing, of course. If this was an American or even a European company, this would have been trading at what, $300, $400 already? Probably something like that, right? So we'll see what happens. I'm pretty happy with my position right now. I'm very happy that it is already working out so early in 2025. Good for them to finally actually grow in a profitable way. Well, do all those buybacks, despite increasing in CapEx quite a lot. CapEx has increased by an enormous amount in the quarter, but then again, it's normal, right? We've seen that with all the other big players out there. So yeah, I know there still is China risk, geopolitical risk, and all of that. But like I said, the market wants to make money, so the market will make money. And so all in all, that's about it for me right now. The next one will probably be about Nebius Group, so stay tuned for that. Hit all the buttons, we really appreciate that, and I see you all in the next one. Bye-bye.